Welcome to the deep dive, where we try to turn those dense financial reports, all that data, into something clear, insights you can actually use. Our goal is simple: give you a shortcut to being properly informed, finding those little nuggets that often get missed. Today, we're diving deep into KFin Technologies Ltd, KFin Tech, as they're known, a pretty significant player, really, in the capital markets world. They've just put out their Q1 FY26 results, and, well, we've gone through the press releases, the financials, the investor decks, the whole lot.
Yeah, quite a bit of material to sift through.
Exactly. And we're here to pull out the most important bits for you. We'll look at their financials. Pretty impressive stuff there, how they're doing in their main market, some big strategic moves they're making. And stick around because there's a fascinating little detail we found buried deep in the notes to their accounts. Really interesting.
Always good to look in the footnotes.
It is. So yeah, you get the full picture without needing to read hundreds of pages yourself. Okay, let's unpack this. So first up, that financial scorecard for Q1 FY26. How did they do overall?
Well, they're calling it a strong quarterly performance amidst global uncertainty. That's the company line.
Which suggests they feel pretty good about where they are, despite, the broader economic climate.
Right. And they say it positions them for stronger growth going forward.
Okay, let's get into the specifics. Revenue.
Total revenue from operations hit $2,740.6 million.
And how does that compare?
That's up 15.4% compared to the same quarter last year. So solid year-on-year growth.
15.4%. Okay. But I remember seeing something about core revenue.
You did. And that's maybe even more interesting. Their core revenue growth was actually faster, up 19.4% year over year.
Ah, okay. So the main engine is accelerating even faster than the overall number suggests. What about profit?
Also strong. EBITDA, that's earnings before interest, taxes, depreciation, and amortization, came in at $9,138.6 million,
Which is a
14.2% increase year over year. And importantly, their EBITDA margin held up well at 41.5%.
over 40% margin. That's quite healthy in this sector, isn't it?
It really is. And it continues down the line. Profit after tax, POT, was $772.6 million,
Gross there.
up 13.5% year over year. That gives them a PAT margin of 28.2%.
Okay, so decent profit growth too. And earnings per share.
Diluted EPS landed at 4.45. Again, a nice bump, 13.0% up from last year.
And their cash position, how are they looking there?
Very strong.
Yeah.
Cash and cash equivalent stood at $7,500.0 million at the end of June 2025.
7.5 billion rupees. How does that compare?
That's a huge jump, actually, up 66.0% compared to the year before. So they're generating and holding on to a lot of cash.
Wow, 66% increase in cash. Okay.
So you look at all that, double-digit growth in revenue and profits, strong margins over 40%, cash piling up. It's fascinating, isn't it? How they managed to keep those margins so robust while growing like this, especially, as you said, with the CEO mentioning global uncertainty.
Exactly. It really makes you wonder, what's the secret sauce here? What's driving this consistent, high performance?
That's the key question, absolutely.
And I think to answer that, we need to peel back the onion a bit, look at the different business segments, because the story isn't uniform across the board.
Right. The details are in the segments.
Let's start with their bread and butter, domestic mutual fund investor solutions. This is their core business, right?
Absolutely. The foundation.
So how's that doing? Assets under management, AAUM.
Overall, AUM grew 23.0% year over year, which is, interestingly, just a touch faster than the industry's growth of 22.3%.
So they're gaining a little bit of ground.
Seems like it. Their market share for overall AUM is sitting at 32.5%, so about a third of the market.
And within that, equity assets.
Equity AUM also grew strongly, up 21.7% year over year. Their market share there is slightly higher, actually, at 33.0%.
Okay, solid growth tracking the market, maybe slightly ahead. What about SIPs? Systematic investment plans are huge in India.
Huge, right. And KFin Tech has a massive piece of that pie. As of June 2025, they hold a 38.6% market share in monthly SIP inflows.
38.6%, almost
Okay.
40%.
Yeah, in Q1 FY26 alone, that amounted to $312 billion flowing through their systems just from SIPs. It shows how embedded they are.
Incredible. Are they winning new clients in this space too? New fund houses?
They are. They specifically mentioned winning registrar and transfer agency RTA deals from 3 new asset management companies this quarter.
Oh, who are they?
Abacus Asset Managers, Marcellus Investment Managers, and Wealth Company Asset Management, that's Pantamath.
Right, so new AMCs choosing them for that crucial back office RTA function, that's a good sign.
Definitely. It handles, all the investor records, transactions, dividends. It's fundamental.
Any other wins here?
Yeah. They also secured a contract from an existing AMC, but this time for developing digital assets. So pushing into tech solutions for their clients too.
Okay. An overall position.
They state they're the largest investor solutions provider to Indian mutual funds. They service 282 out of 532 AMCs.
Wow, over half the AMCs.
And interestingly, they service 6 out of the top 10 AMCs that are growing fastest in terms of AUM percentage growth.
So they're with the winners, so to speak.
Seems that way. They're also launching new platforms. They mention Iris, which is a multi-asset platform for intermediaries, and SwiftFlow, a new payment orchestration platform.
Okay, so innovating on the product side too. Let's switch gears slightly. Issuer solutions. This is servicing companies directly, right?
Exactly. Handling things like shareholder records for corporates, IPO processing, etc.
How's that looking?
Growing steadily. Added 880 new corporate clients in the quarter.
Bringing the total to
8,867 clients now. And their reach is significant. They claim a 50.8% market share among the NSE 500 companies, based on market cap.
half the big ones. Any notable new client wins?
Yes, they listed quite a few securing new RTA mandates. Names like Canara HSBC Life Insurance, ICICI Pru AMC, Micho, Pine Labs, Prestige Hospitality, Shiprocket. Some big private and listed names in there.
That's a diverse list. And IPOs, they play a big role there too.
They do. In Q1, they manage main board IPOs representing 18.0% market share by issue size and an even bigger 40.0% share by the number of IPOs.
40% by number. So a lot of the deals are going through them.
It seems that way. So clearly these core areas, mutual funds, issuer solutions, are doing well, holding their ground, growing. But you mentioned the story wasn't uniform. I guess this brings us to the other segments, the ones they call the future business lines.
Exactly. This is where I think it gets really interesting. Their international and other investor solutions segment.
Which includes things like global fund admin, AIFs, wealth, pension.
Correct. All those newer areas. And the growth here is, well, significantly faster.
How much faster?
Overall revenue for the segment jumped 29.3% year over year.
Wow, okay, nearly 30%.
And within that, the value-added services, or VAS, revenue grew even quicker, 39.6% year over year, almost 40% growth in VAS.
So these newer, potentially higher margin services are really taking off.
It certainly looks that way. Let's break it down. International expansion.
They're making clear progress. The number of international clients is up to 82 now. And the AAUM from their international operations grew 33.5% year on year, reaching 8.9 trillion.
Almost $1 trillion rupees in assets from international clients. Any specific wins?
Yes, quite a few mentioned. A full-service fund administration and transfer agency deal from an existing client in Malaysia, an LOI letter of intent for another full-service FA mandate, also in Malaysia, from a corporate treasury desk.
Okay, Malaysia seems like a focus.
And also the Philippines. They landed their first deal for their Power Wealth platform with a large AMC there.
Empower Wealth, that's one of their newer tech platforms, right?
Exactly. And closer to home, in India's Gift City, they onboarded 5 more funds, bringing their total there to 35.
So a definite push internationally and in specialized zones like Gift City. What about alternative investments, AIF?
Another high-growth area for them. They now service 592 alternate funds. That gives them the 37.0% market share in that space.
37% share in AIFs and the assets.
AAUM in AIFs grew a remarkable 38.1% year over year. It's now at 1.6 trillion.
1.6 trillion, that's significant. Any new AIF wins?
Yep, 23 new AIF funds added just this quarter, including mandates from big names like Tata, AMC, and multiples.
Okay, strong momentum in alternatives. How about the pension side, NPS?
National Pension System, another impressive growth story. Their subscriber base grew 32.2% year over year. Compare that to the overall industry growth of just 12.7%.
Wow, so they're massively outpacing the market in NPS subscriber growth.
Yeah, they now have 1.67 million subscribers, giving them a 9.9% market share overall, almost 10%.
That's serious growth. Any other new initiatives?
Yes, they launched a completely new business line, a KYC registration agency, a KRA.
Oh, interesting. Using new tech.
Apparently so. They mentioned it has embedded AI technology. And they seem to have hit the ground running, winning 5 initial clients quite quickly.
AI-powered KRA
Got it.
and other tech wins.
2 more deals for their Empower order management system with AMCs. Interestingly, one of those AMCs doesn't even use KFin Tech as their main RTA.
So they're selling their tech solutions even to clients using competing RTAs.
Seems like it. Plus, a fund administration platform deal from a large private life insurance company.
Okay, so when you put all that together, the international growth, the AIF dominance, the NPS surge, the new KRA, the tech platform wins.
It paints a very clear picture, doesn't it? They aren't just relying on the traditional stuff. They're actively and successfully pushing into these faster-growing, diversified areas.
It really feels like a deliberate strategy playing out.
Absolutely. This isn't just organic growth in the core. It's strategic expansion and diversification. It really does look like these are their future business lines taking shape.
Which leads nicely into their broader strategic vision and the big moves they're making, like that acquisition they announced.
Yes, the Ascent Fund Services deal. That seems significant.
Very. So back in April 2025, they signed definitive agreements to buy a controlling stake 51% in Ascent Fund Services, which is based in Singapore.
And the financials on that deal.
It's valued at US $34.68 million for the 51%. That includes $5 million of new capital going into Ascent and about $29.7 million going to existing shareholders.
And the total valuation.
The deal implies a total enterprise value of US $63 million for Ascent. And importantly, KFin Tech has a defined path to get to 100% ownership over the next 5 years.
So a clear strategic buy aimed at bolstering their global presence.
Exactly. They explicitly called it part of their sojourn to be a formidable global fund administrator. Very direct language.
A sojourn. Interesting word choice. Okay, so acquisition is one pillar. What about internal innovation? You mentioned AI earlier.
Right. They've set up their second center of excellence, this one in Vijayawada, Andhra Pradesh.
And its focus is?
Specifically on building cloud-native enterprise mobility solutions and, critically, embedding AI and advanced analytics into them. The aim, they say, is to redefine the industry landscape.
Bold ambition. Cloud-native, AI, mobility, hitting all the key tech trends.
Pretty much. And the CEO, Srikanth Nadella, his comments reflected this. He called it an eventful quarter, with several initiatives coming to fruition.
Did he mention the new segments?
He did. He specifically highlighted the growth of those new business lines of future. And he stressed their belief in continuous transformation to, quote, stay ahead of the evolving trends by driving growth and profitability in a responsible manner.
So the message from the top is clear. Growth, yes, but also transformation, innovation, and staying ahead of the curve.
It really ties the numbers, the segment performance, the acquisition, and the innovation hub together, doesn't it?
It does. It paints a picture of a company not just managing growth, but actively shaping its future, investing in technology and global reach.
Yeah.
It's interesting, though. Setting up these centers of excellence focused on AI and cloud is one thing. How quickly do you think that translates into actual products or services that give them an edge? Is it more a long-term play?
That's a really good question. The impact timeline is always tricky with R&D like this. It could be foundational for the next few years, or maybe we'll see some quicker wins. Hard to say just yet. Now, speaking of things that aren't immediately obvious, let's talk about that footnote I mentioned earlier.
Ah, yes, the intriguing detail. What did you find?
Well, you know, when you really dig into the notes section of financial reports, sometimes you find these historical bits that are quite revealing.
The skeletons in the closet sometimes.
Or just, complex situations handled transparently. In this case, it relates back to 2020-21. It involves KFin Tech's predecessor entity, Carvey Computer Share Private Limited, KCTL, which was an RKA.
Okay.
They identified a situation where a depository participant, a DP, had improperly transferred a large number of shares.
How many shares?
Almost 1.3 million. 1,294,489 shares, to be precise.
Wow. And these belong to?
A past client. They were transferred out of an escrow demit-up account back in 2011 and then again in 2020.
Improperly transferred, meaning?
Meaning without the client's authorization. And crucially, KFin Tech says it happened without their knowledge either. The DP apparently acted improperly.
Right. So a third party, the depository participant, caused the issue. That's a serious breach.
Very serious.
Yeah.
A DP is supposed to be a trusted intermediary holding shares electronically.
So how did KFin Tech handle it once they found out?
This is the interesting part. They acted, as they put it, on a good faith and no fault basis.
Meaning they didn't accept legal blame but wanted to make it right.
Exactly. They went out and purchased those nearly 1.3 million shares on the market and transferred them back into the client's escrow account.
That must have cost a fair bit.
Presumably. They also reduced a future payment due to them from the client by 300 million rupees and transferred about 4 million rupees in dividends back to the client as well.
So a significant financial effort to resolve it proactively.
Yes. And as of the current reporting period, June 30, 2025, they've booked a provision of about 85.7 million rupees for potential related claims from this client based on their best estimate.
Okay, so they're accounting for potential future costs. Are they leaving it there?
No. They explicitly state they plan to initiate legal proceedings against the parties involved, including the DP and potentially some minority shareholders, to recover the money they've paid out and the provision they've made.
Right, so pursuing recovery. And the auditors? What do they say?
The auditors, BSR & Co., noted the matter in their review report, standard practice, but they confirmed their overall conclusion on the financial results was not modified because of it.
So material enough to note, but not enough to question the overall financials.
Precisely. And I just find it fascinating that this level of detail about a historical issue and their resolution steps is right there in the notes.
It is quite transparent, isn't it? You don't always see that level of detail.
No, you don't. And it does say something, I think, about their approach to handling complex, sensitive issues, even historical ones they didn't directly cause.
I agree. It actually speaks volumes, perhaps unintentionally.
Mhm.
It points towards a certain operational integrity, a commitment to client trust, which, let's face it, is absolutely critical in financial services. Their willingness to step up, even on a no-fault basis, protects their reputation in client relationships.
Mhm.
And the fact they're going after recovery shows they're not just rolling over either. Accountability matters.
Well said. It adds a layer of context beyond just the numbers and strategy. So let's try and wrap this up. We've covered a lot of ground today on KFin Technologies.
You certainly have.
We saw that picture of really robust financial health, didn't we? Strong double-digit growth revenue, profit, cash just piling up.
Yeah, the headline numbers are definitely strong.
And we explored their leadership in the core areas, domestic mutual funds, issuer solutions, still very strong, still winning deals. But then the really dynamic part seems to be that accelerating growth in the international space and those newer future business lines.
Absolutely. AIFs, NPS, the global push, the new tech platforms like Iris and Empowerwealth.
Yeah.
That's where a lot of the excitement seems to be.
Driven by those strategic wins and new launches. Plus, we got insight into the bigger picture strategy, the Ascent acquisition aiming for global scale, the AI-focused center of excellence driving innovation.
It all seems to point in a very deliberate, forward-looking direction.
So hopefully you listening now have a much deeper, more comprehensive understanding of where KFin Techs stands today and where it seems to be heading. Certainly more than you'd get from just a news headline.
For sure. It's a case study in how a tech-driven platform in financial services is navigating growth, diversification, and global expansion.
Right. In what's clearly a very dynamic market. So here's a final thought to leave you with, something to mull over. When you consider KFin Tech's rapid growth in these newer areas, international fund admin, AI solutions, that integrated multi-asset platform approach, how might that fundamentally change the competitive game in capital markets, both in India and potentially beyond over the next few years?
That's a great question. What new services could emerge? What partnerships might we see develop from this push into cloud, into AI?
Yeah, how does it reshape the landscape? Something definitely worth thinking about as you digest all this information.